British bank shares plunged sharply on Friday as concerns over a potential new tax on lenders intensified. A think tank called for a levy on financial institutions, while a report highlighted fears that the government might target the sector to boost cash flow. Finance Minister Rachel Reeves faces pressure to increase taxes again amid a subdued economic outlook and rising borrowing costs. The Institute for Public Policy Research, IPPR, urged her to impose a tax on the interest banks receive from the Bank of England, arguing it would free up funds for fiscal responsibility. The IPPR's analysis suggests that the £22 billion in annual interest payments to banks, generated by the Bank of England's bond buying programme, amounts to a subsidy. This revelation has sparked debate. While some argue the government is protecting banks, others warn it risks draining public resources. Industry leaders, including UK finance, had echoed calls for systemic reform, citing the need to balance growth with fiscal discipline. Reeves' autumn budget may include a bank tax, as public finances strain under higher borrowing costs. Analysts note that the government's earlier tax hikes on employers have been met with cautious optimism, but recent reports suggest pressures for additional revenue are mounting. What began as an economic stimulus tool has now become a financial burden, said Carsten Young, an IPPR economist. British banks such as NatWest and Lloyds saw their shares drop by 5.1% and 4.9% respectively, as investors worry about the long-term implications of a potential tax. Barclays fell 4% against the FTSE 100, which declined 0.3%. A rally in bank shares since early 2024 was fueled by higher interest rates boosting profitability. Critics argue that the government's approach risks undermining the UK's competitive edge in global finance, while supporters claim it's necessary to stabilise public finances. A spokesperson for the Finance Ministry emphasised that economic growth is the key to balancing budgets, urging policymakers to prioritise expansion over tax increases. The debate over tax policy extends beyond financial markets. Recent reports have outlined options like taxing home sales or increasing taxes on landlords, though these proposals face scrutiny. Meanwhile, the Bank of England's bond buying programme, initiated during the 2008 crisis, remains a contentious topic. Its current restructuring raises questions about whether it will generate enough revenue to offset losses. Industry experts caution that the shift toward a bank tax could destabilize the financial sector, particularly if it leads to reduced lending or higher borrowing costs. However, proponents argue that such measures are essential to prevent fiscal collapse and ensure long-term stability. As the conversation continues, the question remains, will the government's focus on tax reforms ultimately support growth or create new challenges for the UK's financial landscape? Comments are welcome below.